Hi, welcome to another program. This week we are going to talk about the control of the European Central Bank creates conflict among the nations, among the European nations, and we want to talk about what is this conflict, why it arises, and how it's going to affect the stability in Europe in the future. But before that, please support us by subscribing yourself to our channel, and if you like it, also share it with your friends so we can grow our community together. Now, without further delay, let's start. Now, there has been always a debate about the monetary union of the EU in an international market. It mostly fits to the German economy needs, since 59–60% of the exports are done among the EU members. Also, we have to remember that the GDP of German economy, 40–50% are export and import. That means that for each 100 items of manufactured items, let's say, 50 is sold outside of Germany. And out of the 50, 60% is also sold to European Union. That's why Germany has an interest to control the European Central Bank, and always it should be like that, because if there is a price stability and low inflation, Germany will benefit this because of its economy. Germany has been manufacturing a lot, they are buying energy a lot, they are manufacturing a lot, they need to sell a lot, because it will enable them to keep the unemployment on the low level, and it will enable them to be rich. So the people will be happy. So therefore, Germany has a strict policy on price stability as well as inflation and control of the European Central Bank. Now, when it comes to other countries, the picture is completely different. For example, Italy. It struggles to balance the GDP among its own region. Now, the rich region has 48,000 euro per year in the north, two-folds of Sicily, in the south with 20,000 euro per year. Therefore, the parties with national sayings could channel this frustration into votes, which we have been seeing at least for the last 5 years. In the municipalities or in the main parliament, the national parties, we see their members are increasing. The main problem is not only geography in Italy. The industrial zone is too much developed in the northern part. It has a good access with Europe because of the infrastructure projects that have been done in the past, and that reflects into the business. For example, Lombardy and Germany exceeds almost 40 billion euro, which is almost the same size trade between Germany and Japan. That already explains how big it is. So in order to inject, I will say, more liquidity into the market, Rome has the ability to devalue the Italian lira before they joined the European Union whenever required. Now, following the monetary union and its regulations, Italy is left with only one option: to compress the salaries to regain the competitiveness. Which means that if you take the tax out of the line because of the border and all regulations within the European Union, and if you take the devaluation out from your hand, you are only left with competitiveness. And if your companies have a competitive advantage, they will do better. Like Germany, Mercedes, BMW, Bayern, all these companies are doing much more better within the European Union. They might have facilities elsewhere, but the money flows back to Germany as usual. So Italy has been following this policy, but with consequences in the elections. As I told you, the nationalist parties are winning now more seats than before. So low inflation, which Germany always seeks for, has been slashing the Italian economy, let's say, in that regard, with the consumption and investment. Italy needs easy money to balance the debt sustainability, which fluctuates around 150% amid the economic downturn brought on by the pandemic. Before that, it was around 135 between 2014 and 2019. So it only adds like 10% more on its bad, I will say, economy. So low inflation, which is good for European Union in terms of Germany, how they look at this. It is not good for countries like Italy because they need to balance their debts. So following 2008 crisis, the ECB loosened its monetary fiscal policy to avoid deflations. At that time, it was Mario Draghi, the leadership in ECB, applied the asset purchase program like the US have done it, which intend to reduce the long, low inflation while helping problematic countries to sustain their debt problems. However, Germany feels that ECB is exceeding its limits. In 2020, the German Federal Constitutional Court has ruled that ECB bond buying program was partially unconstitutional and ECB acted beyond its limits. It was a signal from Germany to ECB that there is a dispute within Germany how ECB is looking for this problem, how to solve it. It wasn't necessary maybe at that time, but it should be stopped as soon as possible. Let's see if it will be, but it will really have some long-term effect on those developed or much less developed countries. Germany is aware that ECB does not follow the leadership of Germany as once it did, but inflation is not the matter of countries due to the geography, but due to the geopolitic issues among EU zone. Despite the fact that the monetary union was believed to bring cohesion among the EU nations, it brought increasing tensions since each member required different approach to their individual problems. Italy, for example, is in bad economic situation, and any default scenario within Italy, I will say, is not going to only have a devastating effect within, let's say, EU, but globally it will have a devastating effect, that's for sure. Therefore, there will be more fractions among the EU members due to the economy and priorities to solve their problems. There will be no tailored solution for any members in future. The future of EU truly depends on how they will show solidarity during the time of the socio-political instability. So if you like this video, there is a like button underneath the screen. Please press on it and share this video with your friends. Thank you very much for watching and have a nice day. Bye.